Greetings, Zimbabwe, Africa, and the world. Welcome to In Conversation with Trevor, where I go beyond the headlines and beyond the sensational. Today, I'm in conversation with the Managing Director of First Capital Bank, Samuel Matsekete. Welcome to In Conversation with Trevor, Samuel Matsekete.
Thank you very much.
Pleasure having you.
Thank you, Trevor.
So you have basically risen through the ranks at first at Barclays Bank and then First Capital Bank. Do you mind taking us through that journey?
Sure. So if you don't mind, I can actually walk a few steps before that. I've had the privilege of working in other industries. I started off in the accounting profession, qualified with KPMG, worked in the manufacturing sector, traveled my journey from there into the financial services sector. And along the way then joined Barclays then in 2007. I joined the finance department as finance controller. I was then promoted into the role of finance director. And I worked in that role for 10 years, although the role itself also evolved during that time. At one point, it encompassed legal, compliance, and other functions in the bank, which was useful experience for me, and I cherished that. Then I got promoted into the managing director just at the peak of our transition. Effectively, when we crossed over now from Barclays and we became part of the First Capital Bank group.
So talk to us about the transition from Barclays Bank to First Capital Bank. How has that been? Is the process done already, and what have been the lessons from that?
Sure. So I think this transition, the way we've looked at it internally, is it has had three phases. So in 2015, actually, Barclays PLC announced that they would divest out of the African businesses, all of the Barclays entities in Africa. And you can imagine that, that's effectively when the transition happened. When you are advised that you are for sale, it meant that it wouldn't be BAU per se. In 2016, the transaction...
BAU is business
as usual. Sorry. Bankers tend to use these abbreviations sometimes. But yeah, so it wouldn't be business as usual. Whether it's in terms of the investment that you do, capital investment, new products that you would bring to the market. So you could actually see, to a significant extent, part of the disadvantage of being in that long transition, because we couldn't commit as much money into long-term investment as we would have liked to see. So that was the pre-crossover. 2016, the transaction itself progressed, and in 2017, in October 2017, that's when the transaction was concluded. And at that point, the shareholding changed. We used to have 68% held by Barclays in London. That reduced down to 10%, which is where they are at the moment. And FNB Capital Holdings came in and became the major shareholder at 43% as of now, but with a preemptive right to the residual shareholding that Barclays PLC currently holds.
And who is FNB Capital Holdings?
FNB Capital Holdings is a holding company of banking businesses in Southern Africa. They are present in 5 markets as operating business units, and in a 6th market, which is Mauritius, where they provide support services as well as general management activities. So effectively, that's where the head office now is. And when you look at the 5 countries, we're talking about Botswana, Zambia, Mozambique, Malawi, and now Zimbabwe.
How involved are they in the business that you're currently running as First Capital?
I think as majority shareholders, they do have the mandate to control, which means that they actually have a management oversight in terms of how they run the units, all of the units. But that's within the normal confines of how we run businesses. Barclays used to be listed. First Capital Bank is still listed. And within that, we are still needing to make sure that the way that we manage the business complies with all of that. Yes, they do manage, and the whole group does benefit from shared services, from centers of excellence within the group, including the head office itself.
You, from your vantage point,
yeah,
what's the state of the Zimbabwean economy right now? What are the experiences of your clients telling you about what the economy is right now?
I think if I was to summarize, the economy is in a transition. And in a transition because we are coming from a space where there were obvious things that needed to be dealt with. And in fact, the government program itself to deal with that change is called the Transitional Stabilisation Program. But if I walk the journey, say from Q4 of last year to now, and this is where a lot of the action has actually happened, there has been clear consistency in terms of the interventions that the authorities have been trying to apply to the economy as a remedy to the challenges that were there and walking us to a place where we should then start to realize the benefits. So this phase obviously is challenging. This phase is meaning that we cannot be
challenging means there's some pain. We're taking some pain.
There's some pain to be taken.
Right.
And you would remember that one of the questions that investors used to ask prior to September last year in their decision matrix around how do I invest, how much do I invest in Zimbabwe, was to say, what currency do I invest in Zimbabwe? If I move my money from the US as US dollars, from Europe as euro, as euros, when it lands here, what currency is it? And they used to actually raise the issue of saying, I'm actually disadvantaged day one. So what was becoming very evident was that we needed to deal with the currency issue. And in October, what the minister started to do was to send a signal, effectively, to say we now have to separate between the form of the currency we use locally and the form of the currency we would use as foreign currency. And follow it up with the introduction of the other taxes that came through, intermediated money transfer tax. Again, it was a recognition to say, when we do that, we will now need to expect at some stage that we will have an exchange rate that will come through. We will have inflation that will be measured in terms of the local currency. So there was need to start to control what was coming out as a bubble of this pseudo money. And you would then see that intervention starting to also address an issue in the fiscal space to say, how do we make sure that our revenue base is broadened?
So you're comfortable with the stabilization program?
With the stabilization program. I think in summary, I think the point that I've always made is that I think this is one episode where there's been coherence, at least in terms of the policy interventions and in terms of what was aimed at. And I was trying to walk through these steps to just see how consistent it was. I'll pick the other example, the next step that came, which was in February, when fuel price was increased. I think it was actually to say, how do we deal with the external sector, which was another deficit, and it still is up to now. And a part of that was, and a significant part of that was the demand for fuel and our imports. So we needed to make sure that we were using, the pricing of fuel as a rationing tool, but also as a way of saying, how do we raise money, which is why it was excise duty and so forth.
So you as the banker might be comfortable. Yeah. What about your clients? Are your clients comfortable with the stabilization program and the way you're experiencing?
I think the comfort level is really in terms of understanding the objective that we're trying to work towards, and in terms of how coherent some of these policies have been. We also have to recognize that there are discomforts on the part of clients, on part of all economic agents, and banks included, which is to say, are we going to sustain it? And when is the gain going to start to show. When you take pain, you want to take it and understand how much gain and when are we going to realize that gain. I think that's where the discomfort starts to come, to say we've taken the necessary steps. Now we know our currency. Now we also know what we're trying to do to control inflation, money supply, as well as, you know, to try and now support the foreign currency market to be free. And we now need those things to work.
As a banker, in a nutshell, when do you expect to see these benefits beginning to flow?
I think we naturally still have to go into the next agriculture season. If I take the view and point that says we're an agro-based economy, we need to go through this next season and see that we have produced. Because at the bottom of all of this, it's production that we need to see. And production for the Zimbabwean economy can't really be meaningful without talking about agriculture and making reference to agriculture. So when the minister says we will start to talk about prosperity, you know, move from austerity in the 12-month outlook, I think he is also looking at those kind of indications.
So the bank, First Capital Bank, has recorded a profit of 68.1 million. You are not paying a dividend. Explain to us the decision behind that.
So the results for First Capital Bank have got to be understood in a broader context. Now we have gone through a transition. I did explain, you know, a bit about that transition, but within that transition, we also needed to make significant investment into technology. We needed to migrate, just to give you a bit of you know, indication of the scale of the project itself. We needed to migrate about 60 systems from the way that we used to be supported within the Barclays Group to now how we are configured within the First Capital Group and locally. And that was significant investment. We also needed to attend to issues of how we operate in terms of our target operating model, our structures and so forth, to make sure that we are efficient. And that has shown in our results, because whilst we were busy working on those internal change projects, which were very critical and quite demanding, we would not have focused enough in terms of how we would now compete out there, you know, generate and deploy new revenues. And the mix of the income statement will now also reflect, because a significant part of what you see is revaluation gains out of our position or out of our investments. We need to grow and ramp up our interest income, our fees and commission, so that we create the cash flows, and from those cash flows then create space for a dividend. The second thing that has informed us not paying a dividend, it's really also understanding that when the macro environment is going through a change, there will also be significant adjustment at the micro level within the business. And that change requires an operator like a bank to maintain a buffer of capital and be sure that we can sustain whatever shocks might still be there in the adjustments in the environment.
So the period under review, could you please split your sources of income? Where did your income come from?
So you would see us, if I just exclude revaluations, you would see us making more money from fees and commission, which also includes treasury activities.
What percentage is that? Would you mind?
So that would be about 70%. And then 30% would coming from interest income.
Right.
We obviously need to grow interest income, and the thrust has been to make sure that now we can deploy in our loans, in customer loans, prioritizing the productive sector, and the results have started to show after June.
So your capital adequacy ratio right now sits at 29%, and yes, there is a positive thread there that says we are ready to deploy assets into opportunities. What opportunities do you see where you are likely to deploy assets?
So amongst our customers, we do see a lot of opportunity to partner their own efforts to either fund working capital requirements, or to the extent that some of them need long-term funding for the projects that they're embarking on, we also want to be involved in that. So there's quite a significant pipeline that we are working on from amongst our customers, and that's where a significant part of that deployment would go.
What is the mood with your clients? I mean, you're saying you're going to deploy says to me that you see the potential.
Yes.
Are your clients, positive going forward? Where are they as far as the mood is concerned?
And one of the things that you would see in this environment is we find it difficult to generalize. In this environment where we are saying that there are significant headwinds, people are struggling with a phenomenon that seems to look like stagflation, you actually see pockets of operators actually growing.
That's interesting. Where are those pockets? Where are you seeing those pockets?
Yeah, so I think in agriculture, I think there is quite a lot of investment going into those areas. You find people wanting to equip their farms. You find people wanting to prepare for this next season. So that one will take quite a bit. You also see value chains around mining also coming through. And you see people in sectors that used to be probably less prominent. So in subsectors like horticulture within the agriculture sector, tourism, activity is happening. And I think one of the things that the currency change has done is also to promote, people that want to export. Because now they see that you get value, but more than that, you also need to generate currency if you require some inputs. So you also see that some pockets there of people that say, I will do this activity because I can export. But that's not to say that they are not seeing the challenges as well. They are seeing the challenges, but I think they are saying we would also want to do what we can in the meantime. It's not at the scale that we would like to see, but it's significant enough to absorb what our appetite is.
So your liquidity ratio stands at 58%, and the minimum is, government minimum is 30%. Explain the comfort that you draw from that.
Very huge comfort. It means that at First Capital Bank, we can deal with the transaction demands from our customers. It also means that we have got headroom to deploy into the various interest-earning assets that we want to do. It also means that we can settle any size of transactions without needing to really revert on expensive money at this stage, even as the environment itself.
That's a good place to be in this kind of stressful environment that we're in, isn't it?
It is. I think it means that it's one stress, less.
Off the table.
Off the table.
Right.
But we have to also look at that in the context of how the environment itself is to evolve. I think when you have got a fiscal policy which is contractionary, you have got a monetary policy which is really targeting money supply, you can expect that the liquidity will be controlled for the environment. And we need to do that. We need to accept that those are necessary interventions if we want to control inflation and so forth. So it will evolve, but it's a good place to be in because then it means we can evolve with that.
I like what you say about what your purpose is. You say your purpose is, and I quote, is to enable people to achieve their extraordinary.
Yes.
Can you unpack that in terms of practical experience? What does that mean to your clients?
So our various clients, and I'm talking here about all of the segments, whether you're in retail, you're a small business, you're a large corporate, you're a non-governmental organization, you're always aspiring in your space to do new things. You're always having targets you want to achieve, and you actually always wish you actually surpass those targets and be extraordinary in terms of how you assess your own performance. And that's what we are also saying, that we want to partner the aspirations of those customers, of those clients, even other stakeholders that may not be customers. If we can play a part that says to them, we have helped them to achieve that thing that they call extraordinary. And for someone, extraordinary might mean, I want to be able to send my kids to this type of a school, if it's a retail customer, or if it's a corporate, I want to complete this project at an optimized cost, but within my target set timelines. If we can help you achieve that through our interventions and our advisory services, our financing activities, our transaction platforms, we will be happier.
You fulfilled your purpose.
We will fulfill our purpose.
You've invested so much money into your new technological platforms, mobile money, internet banking. But I continue to see queues outside a lot of banks in Zimbabwe. Do you think this investment that you've made, this huge investment, will eradicate the reliance on paper and remove those queues that are outside banks?
I would actually say the queues would have been longer if we didn't have the technology coming in to assist people to transact from off-site, from the convenience of their offices or their homes. But I would also say that the queues should improve as people get
It should be eliminated.
I think elimination, we will always queue. We'll have 2 people in a queue, we'll have 3 people in a queue, but the long queues should be eliminated. And I think that's something that we'll also look at to assess how much progress we've made to extend convenience to our transacting public. But why they are there, I also ask the question, and I sometimes walk along the queues and ask the customers, why are you, what you need cash? You're wanting to withdraw cash. What do you want to use the cash for? And it's a symptom of things that we still have to deal with in the macro environment. Price distortions. If somebody thinks that using cash earns me a discount, which is significant when I go and buy a commodity, they will always queue, despite the channels, despite the other investments we would have done. So we still have to deal with those things, and I think the path is already being traveled towards that.
You're saying, looking into the second half of the year, you're looking at deploying enhanced digital channel offerings. What is that going to look like?
So if I go back to the disadvantage that came with our transition program, and especially because it took quite some time, it was to say that our digital channels were not competitive. I think we have to admit as First Capital that we had a gap, and we had to close quite a lot of things. Where we are today, we have closed that gap. And what remains is to start to avail it to the clients, deploy it, onboard more of our customers onto those channels, make it visible, the advantage that they stand to gain from using our channels. So it will really be the basic, our enhanced internet platform, which is now really much more user-friendly. On our previous internet platform, just as an example, for corporate clients, it was restricted because of the way that it was configured. Now it can be extended to anyone, and it will be that. It will be the mobile banking. It will also be our enhanced, card features for the platforms where they can use.
Mobile banking, is it doing it on your own as First Capital, or is a collaboration with other existing players in the market?
It's a collaboration.
It's a collaboration.
It's a collaboration. We would never be able to invest enough to compete with those that are full-time in that industry. But we think there is space where we can collaborate and be able to leverage partnerships to make sure that we extend convenience.
In the investment that you've done in technology, what is the one thing that you're proud of, that you think is going to move the needle for your customers and for your business?
I'm proud of the fact that there are more than 2-3 alternatives, which are digital, that we can extend, to a customer, and they can choose. I'm proud of the fact that they can also, use those platforms as alternatives in case they are in a place where, for example, a network is not quite strong or stable. They can access some of our platforms much more easily. So I think just the number of options and alternatives that we've given our customers gives me pride. And also added to that, just the fact that we had to leapfrog in terms of functionality of some of those leapfrog and evolution of some of the offering gives me a lot of comfort. If I give you an example, on our mobile banking, we have onboarded a lot more billers, where people can settle their payments than we would have done before, because we
I
went
see.
on
I
to
see you. I'll be able to pay my Zimra from your platform.
Yes.
What else will I be able to pay for?
You can pay more utilities, councils, electricity. You can pay some of the medical, providers. If I'm looking at medical funders, and we are onboarding more, so we are trying to make sure that where people transact more, we are present.
Let's move on now to something that I'm passionate about: graduate trainee programs and undergraduate student internship. What are the requirements? What are you looking for in these young people that are watching you right now, wanting to join First Capital Bank as interns, as graduate trainees? What are you looking for? How many are you taking in a year? Do you want to break that down for us?
Sure. So maybe I have similar passion for
That's
the
good.
youth.
That's good.
And if you actually, before I come to the question of graduate trainees, if you just look at what we do at First Capital in terms of our citizenship programs, in terms of our interventions when we go out, whether it's volunteerism by colleagues in the bank and so forth, we are targeting the youth. And we believe that it's one of the more impactful ways of also shaping our future as a society. So we've got two programs that we run, which are really around the way that we recruit. So when we recruit everyone that comes into the bank, well, we don't discriminate by age and so forth, but we also look at the youth, making sure that they're not disadvantaged, ensuring that one of the criteria that tends to be looked at, which is called experience, is not necessarily becoming a disadvantage to those that are actually starting out their careers. And what we've also said as a message, even in our citizenship programs, is there must be an attitude to say that as long as somebody has got work experience, which is not job experience,
Okay.
They should feel confident that they can qualify to join the bank. Then we also have an internship program. This one is where we take students at universities in Zimbabwe or from abroad, and they want to come and have a year's experience, working experience as part of their program. So within that, we are on average, we take, according to the cycles of the universities, but on average, we could have 25 at a time.
Okay.
That we bring in, and across the disciplines. We also are very conscious to say, if these people have gone through the internship with us, when we subsequently recruit, I think we also need to respect the fact that they have had experience within the bank that stands them perhaps advantaged compared to other people that may not have had. Then the pure graduate trainee program, which is a longer program. We would take an average, maybe 10 at a time, and we've reduced that from about 15 because we were also looking at, the evolution of the bank in terms of how our target operating model is working. But we will be scaling that up now that the transition is almost complete.
What are you looking for? Do you look at a CV? Do you look at attitude? What is it that you look for? Point number one. Point number two. What has been your experience? Have you been disappointed by some people that you've taken, and what have been the learnings there?
So we look at, yes, we do look at attitude. It's very important because we believe that attitude is what will actually make them succeed. But we also believe that part of, especially within the internship program, part of the objectives of that program is to expose these so that they also develop and improve on their attitudes. So it has got to be a balanced criteria. With the programs that we have run, I think we have learned quite a lot. Initially, when we started between the graduate trainee program and the internship, we tended to see certain universities or students from certain universities being a bigger weight of the numbers. And when we interrogated that, we actually saw that it had something to do with how, the universities themselves were grooming their students. And we have shared feedback with some of the universities, and we have also learned from those universities to say how have they deliberately designed their programs, because there is different focus. The second thing, which I think is actually more important that we also learned, is to say that these youngsters are actually looking for a different type of a working environment. They want space where they come in and they feel that they can contribute. So they don't want to be confined too much. They actually want to come in, maybe the first 2-3 months, they want to discover. And oftentimes, within the graduate trainee program, somebody comes and says, I want to join corporate banking. But within the first 4 months, they discover that their passion is more aligned elsewhere. And we've had to allow that space, to be flexible, to say, if this is where you will prosper and we are better aligned, let's get you to explore yourself and your insight within that.
So you accommodate that fluidity.
Accommodate all of that.
Okay.
Yeah, in the program. And I think to credit to the universities, I think they've also started to reflect that, in terms of how we onboard when we engage with the universities and so forth.
So to tell me, what feedback have you given the universities in terms of what you found their output to be? What have you found out and what have you given to the universities to work on?
I think one of the key feedbacks was that whilst they are very strong in terms of core curriculum issues, one of the pieces of feedback we have given is the total person, how they present themselves, how they should feel confident to be interacting, the interpersonal skills, relating with people, communication. I think those are attributes that in a significant number of the cases, you would actually see that there is no active program or attention to some of that. And it has been received favorably.
How much of that do you think is because you and I are old? And that this is a new culture that is coming in.
Right.
And you and I are failing to grapple with this young generation that is coming in. Have you reflected on that?
I think there is a significant part around that. I think when we are talking, even freely outside formal employment places and universities even, I think we tend to say, this is not how we used to do it. And the way we used to do it seems to be better than the way people do it today. So there could be an inclination, even in designing curricula, in designing the programs at work, graduate trainee programs, to incline towards that. So we have had to think consciously about the fact that there could be that gap. And we've also needed to make sure that we infuse, different cultures, age profiles in designing the programs that we want to put in place for the graduate training.
This is interesting because you're mentoring them to come into your place. Mm-hmm. Is there space for them mentoring you into who they are and where they want to go?
Absolutely. One of the things that we have also deliberately said is everyone that comes into the bank, and more so these youngsters when they come to the bank, they actually stand to add much more value than we think we're actually getting.
And you give them space.
And we give them space. And you would see some ideas that we have actually implemented coming from those youngsters. In fact, we have actually said actively we need to give them time deliberately in a week where they're just brainstorming and they are saying, what could we do better? What could we do differently? What should we stop doing as a bank? And that has been useful to connect us to that population, that age group, or the population that thinks that way.
Interesting. Yeah. Let's move now to a matter where talking to corporates. The last program we had the CEO of Dairy Board Holdings, who used to be a chairman,
yes.
Anthony Mandubanza, and I asked Anthony about the Interbank, whether it exists, and Anthony's very unequivocal answer was there is no national interbank market. That banks are trading in individual bank silos. Mm-hmm. What's your response to that?
Yeah, look, I think one of the issues we have had to deal with is when we call something interbank, we actually should make it look like interbank. So there must be a platform where, as banks, we can trade, in addition to trading with our customers, and use that as a core mechanism of discovering the price, the rates at which we should trade. So I suppose my former chairman, what he meant was that Number one, the volume that we are actually trading. Before we come to interbank trades, the volume that we are trading between banks and customers is not at the level that it should be. And that is probably something that can be expected, given that the demand for currency by those that generate it is high. When an economy is importing more than it is exporting, you can expect that even at a micro level, those that are exporting have got significant demand for that currency that they're generating. So that will leave a much lesser proportion, to offload to those that don't export but require currency. So that's one. But there is also an element that says we are evolving. So if I come to trading between banks, one question you ask as a bank is, before I trade with a bank, do I not look at my queue of customers and try and satisfy the requirements of my customers? And I think each bank would be looking at it in that way. We are, however, in discussions to say, just for price discovery, just to ensure that we have got a way of transparency being improved, we should encourage a certain portion of our trade to happen between banks.
I get a sense that the US dollar is back in full force in day-to-day transactions. Is that your experience?
I think in all markets where the US dollar, where economies have dollarized, it's been very difficult, if not impossible, to eradicate the dollarization phenomenon. And at the least,
it's a mental thing, isn't it?
I think it is to a significant extent, and it is because people always think about why did we dollarize in the first place, and they keep looking back and they check for symptoms of, okay, so if we are avoiding that dollar now, are we not going back to why we dollarized in the first place? But also, I think it's a psychology, it's a behavioral thing, where if I look at people, the way they price, they keep the US dollar in the back of their minds and they want to price in local currency in reference to the US dollar. In an economy that has never dollarized, you don't have that as a reference. You reference your pricing according to your cost of goods, acquiring the goods, or bringing the services to your client, and then you want a margin on that. That's how you normally price. But here people price in reference to a US dollar.
Will we ever get out of that? What's your sense?
I think we will. We have to work towards getting out of that. If we have to operate as a normal economy, and if we have to realize the dividend of, how fundamentals of exports, imports work, and local productions and productivity should work. Because we should be saying, how do I produce and get value from producing? Not from referring to another currency or from trying to cross from my local currency to another currency. And I think the biggest thing that we have to work on to achieve that, it's really the confidence. And Trevor, we talk about confidence in terms of confidence in the minds of foreign investors. I think we need confidence in the minds of local investors. You and me being confident that if I transact in local currency, I buy a good or I buy an asset, I'm actually progressing, even as I do that before I look at.
What do you think it will take to get that confidence back?
I think number one, we have, if I talk like an economist, we have to make sure that our policies remain consistent. And I go back to the point that I was making, that at least the policies have been consistent. I think we now need the confidence dividend to come through.
Sure.
I think we now also need to look at how we run things, to be making reference to, are we thinking long term? Are we thinking short term? When you are in an economy where you have had the experiences we've had, I think the tendency is to have shorter horizons in all our decision matrices. It can't work for an economy if we want to build confidence. We have to have the confidence to say, if I do something for an outlook of 5 years, of 10 years, I'm having better chances that I will actually succeed. And that way we will foster, the line of thinking that works for the bigger good.
As a man who sits in a very powerful position where you give access to funding for businesses, what advice would you give to young entrepreneurs who think they've got great ideas, but think that banks sometimes are risk averse to lend based on ideas. What advice do you have for young entrepreneurs wanting to get into business?
Yeah, so I think two things that I've always said to the youngsters is, number one, maybe it's three. Number one, I think the idea itself is valuable. And number two, realizing the idea and making it work doesn't necessarily mean you need to protect it and own it yourself 100%. Be prepared. Yes, you have the idea. You can protect it in terms of the rights to that idea, but be prepared to have other people invest in your idea. This means you may have to end up, based on your idea, having 30%, 40% of the business you create out of your idea. Because somebody that doesn't have that idea may have the funding. But the challenge is always there where you think, it's my idea, I want it 100%, and I want to fund it, and I want to fund it the way I think I should fund it. Most people that have created big businesses have generated the idea, but they've looked for ways to then evolve that idea into a business. I think I've also encouraged young entrepreneurs to say, formalize, and this is one of the things that I really have passion. I've got a few things that I'm passionate about, to digress a bit, environment and how we should protect our environment. But, just the way that we look at ourselves as an economy, to say small scale, young entrepreneurs, I've always said formalize. You can be small, and every business starts small, but I don't think that you need to be informal. By formalizing, you start to open new doors.
Right.
When you formalize, people start to see you.
What does formalize mean?
I think you should register your idea, be part of a formal structure. We do have, if you are in a certain industry, you need to find out what does it mean to be licensed in that industry, or at the minimum, what structure for my business should I create? Register a company, register, if you want to operate as a sole, at least make sure that it's something that is distinguished and starts to be operating in that space.
A legal entity.
A legal entity. And formalizing also means use formal channels. There is no way you will grow your idea into a big business if you are trying to promote it behind the scenes, in the underground all the time. Formalize. People will see it, people will support it, they buy your product, they buy your idea, they even are prepared, better still, to invest in your idea.
Sam is a busy man, a banker, with a lot of people looking up to you. How do you relax, Sam?
I enjoy spending time out in the countryside, so I visit my rural relatives, I visit my old men back home, maybe more frequently than an ordinary person would do. I spend time, just enjoying in the environment. In my spare time, I walk. I use it as a form of exercise, jog.
How many times do you walk a week?
Oh yeah, every week I have to make sure that at least twice I'm walking about. And that time I use to reflect as well. I tend to like nature. Maybe it's because of where I grew up.
Right.
Yeah, I grew up in the Eastern Highlands, and we would hike the mountains. And I remember we would even do, official hiking of the Chimani Mountains, abseiling with tourists during those times. So I like nature. You
said there's a few things that you're passionate about, and you touched on the environment.
Yes.
Anything else that you're passionate about?
Yeah, so the environment, developing the youth, wherever I can, imparting whatever I can offer to the youth.
Sam, thank you so much. I love your passion for the environment. I love your passion for investing in our young people and giving them an opportunity to thrive. So thank you much for coming in conversation with Trevor. Thank you so much.
Thank you very much.
Thank you.
Thank you, Trevor.
Thanks for watching. Don't want to miss out on these insightful conversations? Subscribe to our YouTube channel.